Okay, everyone, let's dive into analyzing two trades I made a few days ago. Also, make sure to stick around until the end of this video if you want some actionable tips that can perhaps be a game changer in your trading. Starting with a 10-minute chart, we can see that once the price explored
Order
this
submitted.
area of liquidity down here in the form of an order block, and for those of you who are new to day trading, order blocks are basically large clusters of buy or sell orders that often create trading levels that can affect price action. So once the market explored this order block area, it spiked by a good 25 points or so before settling into a consolidation phase. We then oscillated within a range marked by the 49.42 level and the 49.56 resistance level, which, as you can
Order
see,
filled.
I have marked with this blue horizontal line. Now, after the trading range had been defined, my focus shifted to pinpointing an area of interest. Identifying this area was straightforward in my view, as the market leaned heavily towards the rest of the 49.56 level, a level that almost felt instinctive, particularly when considering these higher lows down here printed between a bullish hammer and a dragonfly doji bar, both obviously bullish patterns signaling that a downtrend, as far as this range is concerned, that a downtrend might just have run out of steam. Another important technical aspect was this 12 points or so plunge, which was obviously the result of a sudden influx of sell orders that led price, and guys, this is important, that led price to retest without breaking below the channel's support area. Adding to this, there were these two consecutive 10-minute demand bars, with the first one forming an imbalance zone, and this zone served as my entry point for the trade as the price retraced back into it. And as you can see from the price action, once I got into the trade, it moved in my favor. I also trailed my stop loss in anticipation of another possible retest of the 49.56 resistance level, which obviously didn't happen until a bit later. However, the setup still, I think, led to a precise entry and obviously a green trade. My exit, though, could have certainly been timed better. And speaking of setups, if anyone were to seek guidance from me on trading, my primary piece of advice would be to be patient, meaning you shouldn't force or rush your trades. Instead, let the setups you are looking for naturally emerge. I believe that rushing only leads to settling for suboptimal setups, which often lead to stupid ass mistake, in the sense that these are unnecessary losses. So just wait for the right conditions that align with your strategy before entering a trade. Also, right now, if you are new to the trading game, it's important for you to focus on gaining experience and creating a solid trading system. The goal is to practice while losing the minimum amount of money possible. Once you are confident that you are making the right moves and your system has a proven edge, then you can consider slowly increasing risk in your entries. This approach is sensible, I think, both from a practical and mathematical standpoint. All right, now that we have covered this trade, let's take a look at the next one. The focal point of this trade is the same area of interest that caught my attention on the previous entry, but this round is set against a new backdrop on the time frame. I think that what's different with this trade are the technical elements at play influencing where I decided to jump in. So starting down here, we have all this move from the base of the original consolidation area all the way up all the way up to the reversal of this blow-off move up here. Now, what implications does this movement hold? Well, if you think about it, consider the multitude of stop losses that were likely positioned and grabbed by market makers above this level here. That said, in the context of this failed breakout above the 49.56 resistance level, this is an area that should offer some decent selling or at least an intermediate term resistance. So following this move lower, the market, after creating this nice imbalance zone, and real quick here, for those of you who don't know what an imbalance zone is, in short, imbalance zones in price action trading refer to areas on a chart where there is a strong disparity between buyers and sellers. This disparity can manifest as aggressive price movements. Now, you as a trader can use these imbalance zones or these liquidity gaps, because essentially that's what they are, liquidity gaps. So you as a trader can use these imbalance areas to predict future price movements, pinpoint, as in this case, entry points, and identify reversal areas. I think that spotting these key zones is like getting a sneak peek into the playbook of the big league players. You know what I'm talking about here, the Goldman Sachs and Morgan Stanleys of the world. These guys move markets and they leave behind breadcrumbs or subtle clues in the price charts. If you are attentive and on your toes, you can figure out their moves and possibly make winning plays just like floor traders. It's all about reading the game and playing it smart, guys. So keep an eye on those imbalances. Returning to the chart, following this downward move, the market, after again creating this nice imbalance zone up here, the market starts to go through a retracement back to the upside. Now notice how this demand move is not the same level in terms of material price progress as this one on the downside. What that tells me is that the market could be in for a period of manipulation to suck in longs before the next move lower. That's why I placed my short smack dab in the heart of that imbalance zone, right where the market's true colors show. And guess what? After getting filled, the market, as you can see from the price action, experienced a sudden decline, causing my profit target to be hit. I must say though that while the entry was almost surgical, my exit sucked big time. The market added another 20 freaking points to the downside after I exited the position. Clearly, I bailed out too early, leaving some serious points on the table. The lesson learned though in this game: timing is not just everything; it's the only thing. And by the way, if you are looking to improve your imbalance trading and amp up those results, then you simply can't afford to miss this next video. All right, gang, that should do it again for today. Thanks for watching, and as always, hope to catch you all in the next video.